Welcome back to the Vault Society podcast, the place where entrepreneurs and investors come to get locked in and go all in. My name's Danielle Harrisek, and today our special guest is Toby Garcia. He is a key holder here at the Vault. Welcome.
Thank you for having me. I appreciate your time.
Yeah, of course. So for those that don't know you, please give a little background about yourself, a little bio, and what you're up to now.
For sure. So Toby Garcia, I'm a partner and tax manager at JBS Corp. We have an office located in Methuen, that's our HQ, and we have a smaller satellite office in Lawrence as well. I've been doing this for 11 years in the tax and accounting world. A little bit of a untraditional way to get there. I'm not a college graduate. I'm a dropout. I call myself a first generation college dropout.
Makes the best entrepreneurs.
This is true.
Dropouts.
This is 100% true.
Yeah.
And I'm lucky enough to have CPAs and enrolled agents on staff that do have the credentials. And for me, it kind of just came about with service, right? Understanding my community, the needs. And I had a small book of business starting out, and I've been able to help the business grow a ton. We have maybe 6,000 individual returns that we do a year, and about 500 plus businesses that we help throughout the year as well.
Amazing.
Yeah.
And so right now is your busiest time. So
Yes.
thanks for taking time out to
of
be here.
course.
Yeah. And so how do you get yourself in like the right state of mind during this time?
I have no idea. It's a great question. We have a great team.
Yeah.
Several years ago, it was a lot harder to figure out life and balance things as much as you can. I don't believe in balance. It's not. It's just, especially in entrepreneurship, it's not really a real thing for us. But trying to figure things out as much as I can. I'm a father. I love being a dad. I love being a husband. So making sure that they're okay, and then the business comes in, right? But they're number one always. And being able to have 40 people on the team to help the clients when I can't is key, right? That's the only reason I'm here, 2 weeks from the deadline, is because we have a great team that can kind of assist and step in when they need to, especially when I'm not around doing fun things like this.
Yeah. So how do you keep your team motivated during this busy time?
Sheesh. We're like a family, to be honest. We're all family at one point, and as we grew, we are the minority now in the office. We try to keep things light. We're not a traditional accounting firm where we're stuffy and we don't like to talk to our clients and we just say send in your paperwork and we get things done that way. We love bringing people in. We love to have fun. We have music playing in the background.
Nice.
I wear sneakers all the time with my suits. Like, it's just a different environment. So just that inherently kind of helps to keep things light and keep things fun. But motivation as far as work goes is, you have to get things done.
Yes.
And the work is there in front of you, right? In tax season specifically, the work is there. So it really shows if you're not motivated, if you're not doing things. And I think people, when you work and you do things and you roll up your sleeves as one of the owners, and they see that, people just get attracted to the work and seeing you do things. In the off season, a little harder to motivate.
Yeah.
But in the off season, what we do is we bring people along to, any talks that we have. We have seminars at the office. We do so many different things, again, that most traditional firms don't do. And that keeps the office moving, doesn't keep us stagnant. And I think that helps a ton as well.
It sounds like you're creating you have created an amazing culture within your clientele and your staff.
Yeah.
That makes a big difference.
Yeah, the lines get blurred sometimes, which is not as fun with clients, right? Because when my cousin and I were the ones doing most of the work in tax season, we would pick up the phone at 3 a.m., 2 a.m., 1 a.m. We had no kids. We weren't married at the time. And definitely not healthy, right? So we worked very, very hard to figure out those boundaries and have that separation, but still being very involved and very present and helping as much as we can, right? We started saying, if I don't pick up immediately, I'll be able to get back to you in 24 hours, right? And keeping that promise has been super helpful to separate things and have the wife and kids happier.
Yes.
And not hating tax season.
Yes. Yes. So what do you recommend entrepreneurs do year round so that this part of the year is not so taxing on them and their business and their time?
I think you have to have a conversation with your advisor, your preparer, whatever person is helping you with the finances. You can't talk to that person once a year in April. It's just not right. It doesn't feel good for either side to do that, right? So you have to have somebody at least meet with you twice a year. And when I say twice, I mean mid-year point and in November, December, which is tax planning season. You can't have a conversation in January.
No.
February, March, April, because the year's gone. We can't help you with anything.
Right.
I would say you should meet with them much more than that, but at the very least twice a year, midpoint to see how things are going, and then right before the end of the year, right before Thanksgiving probably is best, so that you can get some advice as to how you should move and what things you should do to help mitigate some of the tax liabilities. Or maybe you're looking to buy a house or buy property, and maybe your taxes shouldn't have a ton of the deductions. Maybe depreciation is better, right? So having those conversations before the end of the year is very, very important.
Yeah, and even before making big decisions.
Oh, yeah. Yeah. I should be your best friend.
Yes.
Right? You should be providing my email to your realtor, to your underwriter. We need to have those conversations, and you shouldn't be playing the middle person, right? You should have a team set up. And if you don't have that, I would urge you to create that, or at least ask of that from your advisor, or look somewhere else, right? It's as simple as that. You can't really afford not to have someone on your corner talking things through with you. You might be a great real estate investor, but you might not know numbers. You might not know what a balance sheet is. You might not know what that should look like. So people should be helping you through that.
Yeah, it's just part of your team. Like you have assistants, you have this and that. You need to have your bookkeeper, your accountant as part of your team.
For sure. And sometimes you might not be able to afford it, but you should be able to.
It's
at least
non-negotiable.
Have a conversation. Oh yeah,
truly, because you're going to be paying for it at the end if you don't.
100%. Agreed.
So what are some non-negotiables that you should be doing with your bookkeeping year round?
You have to get your books done, whether it's you or someone else. Get it done. YouTube University, we learned a lot of things. We have AI now that helps a ton in making sure that you can kind of clean things up. If you don't have clarity in the numbers, you don't know if you're making money or not, right? So I've had folks say, I'm not making money, and they are, and I've seen people say the opposite, right? And you don't truly know until your numbers are clear, right? So that's a non-negotiable. The numbers need to make sense. 1 + 1 = 2, no matter what country you're in, no matter what language you speak, right? So you need to make sure that those things are clear. So whether you do it yourself, which is doable, at the beginning you have to wear all the hats, right? I remember reading a book called E-Myth, E-Myth Revisited, right? There's 3 hats we wear: the entrepreneur hat, the manager hat, and then the technician. We work. We have to do all three at the beginning, and it is what it is. You have to work. But at certain points, right, you have to make sure that you bring people into the team. And you have to offload some things so that you can continue to grow. So I would urge folks that at the beginning, make sure you have clarity, right? Make sure that your tax professional at least is making sure that your balance sheet is balanced, right?
Yes.
Like it's in the word. Making sure that you know the true value of the basis on that property. Making sure that if you depreciated 100%, that you know what that means, right? All those different things, just bring in that knowledge and continue to seek knowledge, right? Just because you bought a property doesn't mean that it's over, right? Now it snowballs into something great, right? It takes time, it takes effort. A lot of reading, a lot of connecting with other folks, right? Which is what drew me to this group, right?
Yes.
I'm not a real estate investor per se in the traditional sense. We own our building, right? A 10,000 square foot building. I own a single family. But what drew me to this group is that they are entrepreneurs in other ways too. And I was able to connect with that. And I am thinking about doing my own thing and kind of having a say in what my finances look like outside of being a partner at a firm and outside of my 9 to 5 or what have you, right? So I think clarity in the numbers, making sure that you do some bookkeeping, light bookkeeping at the very least, making sure that your taxes reflect those books, right? And then once you start growing, offload that ASAP.
Yeah. And so you should be meeting with your bookkeeper once a month to review the previous
Not necessarily.
month?
No. I'd say cut your books once a month for sure. But quarterly, right? Maybe quarterly starting out if you're small. If you're bigger, monthly. If you're much bigger, weekly. You need to have somebody that's an advisor, controller, right? We're working with some folks here at part of the crew that they're trying to hyper grow. And when you're thinking about hyper growth and pivoting and doing things that are impossible, right? Impossible goals, you need to make sure you have somebody on your corner that's helping you through that. So we're speaking to folks weekly in an advisory level, right? So we're lucky enough to have a group, a team big enough where we have different, departments, right? So we have a foundation department that helps a lot of like our older clients that are individuals or have small businesses and they're not thinking of growth. They're pretty, stable. And then we have the growth department where we're giving advisory work and kind of meeting you where you're at. If you're thinking about growing, if you're thinking about doing things in an extreme way or an impossible goal, we help with that. So whether it's doing compliance work like tax, whether it's thinking about what's the next move and how we can kind of protect those assets and doing some tax and wealth planning, all those different things, we do it in-house, which is very rare.
Yes, I was going to say a one-stop shop. That's amazing.
It's very, very hard to do. It's very, very hard to price, right? But I think we were able to figure it out. And we're happy to kind of extend that service and lend a hand in our community, because that is really reserved for the rich, right? Being able to do that work. But I think we figured out a way to kind of have people come in an entry level and grow from there. And like I said, meeting you where you're at.
I think that's amazing that you're extending that to your community, because like you just said, most people think these services are for the rich, and like they don't actually understand how to build wealth. You know, even if you don't have this big job, you're making all this money, it's like you slowly layer the bricks. And if you don't know what you don't know. So if there's not a service out there to offer that to the community, how are you going to know?
Right. For sure. And again, some folks do have it. Maybe they have pieces of those things, but being able to have it in one place where everybody's just communicating fluidly and figuring out things quicker, right? Not having to send an email to your advisor that does this, your advisor that does that. Just having all those things kind of together. And even if we have to offload things, we're not lawyers, right? We have to offload certain things, but having a network where we can have that communication, and speaking again, having us all in an email thread or having us all in a text thread, so we can communicate clearly, quickly, right? Some of these deals go fast. And if you're not ready, not just with the money, but with the finances and having the team working together, it'll go to somebody else, right? So just being able to have that in-house has been special. And it is something that we've been working very, very hard towards in the last 6 years.
That's great. Yeah. That's awesome. So at what point do you feel like when somebody's grown their business, do they change their entity? Like, you know, do they change, do you know what I mean?
Yeah. You know, everybody's different, right? Depending on where you live, depending on, you know, your situation, if you file married, if you file single, if you have dependents, right? Those things kind of can dictate that. But I'd say, you know, legal entities are legal entities. If you're a painter, if you're in construction, if you have risk, I'm saying LLC all day, right? That's what protects you the most. Now, you do have the ability to be taxed as an S Corp no matter what entity you have. And that's where you have to start looking at the numbers, right? At the moment, you know, don't quote me on this, but 40 to 50K profit consistently is when I start considering S Corp. Why? At that point, the tax savings and what you have to pay to run an S Corp, they're pretty much even, right? And the reason for that changed, right? I would give you a different answer maybe before the first Trump administration, because once the 20% QBI came in, where you're automatically getting 20% off on your net profit, you know, I decided it was in time for some folks to have an S Corp, right? So the strategy changes, and you pivot, right? So there were folks that I told, you know, 8 years ago that they should be an S Corp, that I would probably not say that as quickly anymore. So, you know, things change.
Another reason to stay consistent.
Another reason to stay consistent. Talk to folks. Talk about your goals. Talk about what you're thinking you're going to be making in the next couple months, right? Because if you don't have the conversation and you made more than you thought, you're going to be paying a lot more than you should be in taxes, right? And again, it's important not to have like those blanket statements and tell people, if you do this, this is the only way to go, because things are different. People's situations change. So definitely talk to an advisor, but I really, really wouldn't consider things like an S Corp when it's too early. You're going to be spending on payroll. You're going to be spending on filing a separate return, for example, when you don't need to. So sometimes it's not worth it. Even when you're starting out and you have an idea and you're just have a side hustle, it's not always the right move to right away go to the Secretary of State. Maybe it's better to just get a tax ID. Start working towards these things. Build a client. Like, give me a tax problem that I can fix. It's very dangerous to go to YouTube and TikTok and buy a boat and write it off. And, you know, it's like, you don't even have a business yet. Why are you doing these things? That's a personal expense. Right. So you have to be very, very careful with how you read into things and just going off of all these advisors online, because it might not be for you. It might be too early, but it also can be too late if you don't speak to the right people or if you're not on top of your business.
So how often do the tax codes change?
Every 4 years, slightly, maybe, right? So anytime there's a new administration with, you know, new goals in mind, I'd say the Trump administration was the biggest overhaul we've seen in a long time, on the first and second. So we've had some substantial ones during the pandemic and beyond. So there's been a lot of changes, which, you know, just be soft with your accountants, be understanding.
As you navigate it.
As you navigate all these changes, especially the solopreneurs, the 1 or 2 person shops. They've been going through a crazy few years. But it's definitely been a wild ride with the tax code. It doesn't really change too much. But the last few terms, the last 3 terms in presidency has changed a lot of things. Even the newest OBBBA, not too crazy, not as much as the first term, but there's been a lot of changes. And you need to make sure you have somebody that's up to date. Going to conferences,
so important.
Continuing education, all those things where some of the older shops, they refuse to, right? Because they know what they know. And I work for you, not the IRS, right? It is what it is. I'm not working for the IRS. I work for my clients. That doesn't mean I'm going above and beyond, like going too far. There's a line and I'm going to go right up to this line. But to be able to do that, you need to understand the tax code in a way that most people don't.
Yeah. I just heard that you can't write off beverages and snacks for your office anymore.
Yeah.
Is that true?
Yeah.
I'm like, what?
It depends, right? So if it's considered entertainment, no. If it's considered food for the team, yes, right? So it's all about context, right? You need to tell a story. And it also depends on the auditor.
Yes.
Right? You might get away with stuff with one auditor. You might not get that same leeway with another. And they're all different. A thing right now with the IRS is that they don't have enough folks working there, right? And you have to take that with a grain of salt. That might be there might be pros and cons to that, right? And they might not be auditing as much as they used to, but they will focus on big ticket items. So they might not focus on things like meals and entertainment as much unless you surpass a crazy threshold, right? So you just have to be careful. Don't do too much. Make sure that you run things by your professional and say, like, this is what I'm thinking of doing before you do it, right? Don't just buy a vehicle because you heard that you can do 100% depreciation. Like, do you need this car?
Yes.
Like, all you're doing is buying this
is
vehicle
it the right
at 30%.
weight? Like,
And even if it's not the right weight, you can still depreciate and do some certain things, maybe not special depreciation, but you can still depreciate it over 5 years. Just make sure you need it, right?
Yes.
Have that conversation, right? The tax planning season. If you don't need this vehicle, why are you buying it? Just for taxes? Well, you just bought yourself a liability, right? And you bought that vehicle at 30% discount. That's really what you did there. You still have to pay interest. You still bought something you didn't need. And ultimately, that's less money in your pocket, right? You might have something new and shiny, but it did nothing for you, right? So, completely changes when you have an asset that appreciates instead of depreciates. So if you buy a property, for example, that's something different, right? Those are things that we have to still think about. We still have to make sure you run the numbers and you have professionals that help you through that process. But, buying trucks and cars and machines that you don't need just to lower your tax liability is not always the smart move, right?
Right. What is like the craziest thing that you've seen somebody try to write off or that you've been able to write off?
Okay, so I'll answer. Okay, I'll answer the first one, right? Okay. So I can tell a lot about somebody's financial life through your bank statements. I don't even have to do the books necessarily, but I've seen a lot. Stop commingling. First of all, I'll say that commingling is wrong. It's bad. Don't do it. I've seen OnlyFans transactions in there. No. Yes.
How is that a write-off for your business?
I've seen motels, right? Local. Right? And it gets interesting when you're sitting there in a tax planning session.
You have to ask questions.
A husband and wife, and you're like, what's this expense? Can I send you a pivot table later that you can do on your own? But maybe craziest things that I've been able to depreciate. I don't think they're crazy, but boats and things of that nature, I've been able to do it. And the way that people have been able to get around that stuff, doing the jets and the boats and all these things, is you have the name, right? You have to do business on it. You have to do a lot of things for it to be able to be pushed through. I'd say be very, very careful. The next maybe 4 to 5 years, the IRS is focusing on a lot of those deductions. If it's not solely for work or business, they're tracking that. So they're going to be tracking the flight logs, right? Who's with you. So if you're with your kids, that's probably personal. If it is business, then they're going to start asking questions like, how many days out of that week were you doing business? Was it a conference? You were only there for 3 days. What about the rest of the 7 days? That's not a tax write-off. So you have to be very intentional as to what you write off and how much of it you write off, right? So it's, again, telling the story. It's all context, Right?
And you're going to forget that a year from now. So what's your advice in the moment, or, right after the trip happens? What should you be doing to document?
I'd say there's 2 words. This is straight from the tax code. If you forget everything else that your advisor tells you throughout the year or when you have meetings, is this: anything that's necessary and ordinary for me to run my business is a tax write-off. No ifs, ands, or buts. Both have to be true.
Yep.
Okay, I'll give you an example. If you're a dentist, do you need a boat? Is that necessary and ordinary? Maybe it's necessary. Maybe you live on the water and you need to take this boat to get to the office. Ordinary? Not ordinary at all. Yes. I don't know any dentist that needs a boat to be able to clean my teeth. I know 0. You're a trucker. Do you need a jet? Probably not. You need to go from point A to point B with somebody else's goods in a truck, not a jet. Right? That's a personal expense. Now, context-wise, if you owned a trucking company and you grew it and now you have 170 trucks and you're doing deals from East to West Coast, maybe. Now you gave me something to work with, right? So again, context, necessary, ordinary, those 3 things, those 3 keywords is what you need, right? You don't need me throughout the year. You don't need me to tell you when you're in Aruba whether or not you should run this card.
Yes.
If you just say those 3 things. I'll pick up the phone, right,
yes.
at some point if you call. But you can do it yourself by just answering those 3 things.
Love it.
Is there the right context? Is this necessary? Is this ordinary? You do those 3 things, you're going to be fine. You don't need me, right? But I do see some interesting things that they're trying to write through, right? Just if it does not pass those 3 rules, just transfer it to your personal account if you don't have enough money on the personal account, right? It's going to make your life easier. It'll make an audit process a lot easier, right? And this is all in case of audit too, right?
Yes.
Again, you also created this entity, this legal entity, to separate yourself from this business. If you're commingling, there's no separation. Right. So any lawyer worth their salt is piercing that corporate veil. They're going to lift that corporate veil, and now everything's in place. So all of this that you separated and all these assets that you've amassed, they're all in play now, right? So you have to be very careful. And it's not just like fun and games or like, oh, my accountant doesn't want me to write this off. He doesn't know what he's doing. He's not willing to take risk. It's like, no, I'm just not willing to take risk of your business, which is incredible that I care more about your assets than you do. And again, it's not that you can't use your money. It's just that you can't write some certain things off. It's just not a business expense. Whether or not you want to believe that or not, that's another thing. But again, you can get very, very creative. Just involve your personal life as much as you can in your business. And suddenly some of these things are a write-off, right? But you have to be very, very careful.
Yeah. Great advice.
Yeah.
Love it. So what do you want your legacy to be?
Yeah. So I want to just shorten the wealth gap in our communities, right?
That's great.
Kind of close it up a little bit more from the haves and have-nots. Right. So my cousin just wrote a book, The Small Business Money Game. It's coming out in the spring. And he talks about it as thinking about Monopoly. We used to love playing Monopoly when we were younger. And, the top hats versus the race cars versus, the dog or what have you. You can interchange those things. But the top hats have it all. They're the boardwalks of the world. And the rest of us are just trying to figure things out with whatever little information we have. Right. So I think in our office specifically, we're still trying to figure out what our new mission is, right? The one that we're going to plaster on the walls. But I think we're just trying to make that American dream available again, right? Not just because the American dream was really for some folks back in the day, and you had access to that a little bit more. It's harder to have access to that. So being able to kind of bridge that gap is going to be huge for me personally and for everybody else. So that means not just me and my family having access. I've been able to taste a little bit of that, but I want more. Right?
Yeah,
and I want to be able to bring people along for the ride.
I love it. That's amazing.
Thank you.
So what are you locked in on right now in business and personal?
Yeah, so we have an impossible goal, just like a lot of folks here. I think, to get personal, I think one of the things that we want to do is get to 10 million revenue in the next 2-3 years. We've been reading a ton. We've been working very hard. And the way we've decided to be able to do that is to just do what we do. What has worked for us in the last 20 years, and for me, the last 11 years, is going to continue to work, but now we have to take risk. We're going on the offense, right? We've been able to kind of amass all these clients just by word of mouth, which is amazing. But now we're actually going to go ahead and take on more folks, expand to other states, which we've already been doing. So we have folks in Nevada, we have folks in Florida, we have people in California, and just accelerating that growth. So we're taking on all types of businesses. Thankfully, we haven't niched down, right? We have different accountants, different CPAs that focus in different, worlds. So we're able to kind of just take anyone on. And at the moment, we did start working with real estate investors a ton more than we used to, because we've noticed that there's a need in that niche, because there's no management softwares that do accounting, and there's no accounting softwares that do management well. So you need somebody to kind of bridge that and help you as you grow. So we've been focusing on that a lot, I'd say Q1 of this year. But yeah, continuing to bring on a lot of clients and growing, hyper growth.
That's wonderful. You're changing the community. It's great.
We've loved it since the beginning. We started doing things on an individual level, just telling folks like, listen, there's this thing called a 401k. You should do it. And if you do that, it lowers your taxes. Now you get a little bit more earned income credit for your kids. You could take that money and, invest some of it, maybe go to Disney with the kids. And now we've grown from just that to saying, listen, you need to buy a house. You need to buy several houses. You need to sell this and do an even exchange so that you could do that. Maybe you should do cost segs, all these different things. And we've kind of grown. As we grew in our knowledge, we've helped our clients grow with it. So I think it's time for us now to kind of be a little bit more selfish so we can help the next generation and the next iteration of what our clients look like and grow from there.
It's incredible.
Thank you
Love
so
it.
much.
So where can everybody find you?
So socials, so Insights with Toby on Instagram. Our website is jbscorp.net. I'm available everywhere. If you don't find me at the office, I'll be online doing videos. I like to do videos.
Yeah. We're here.
And I'll be here as well. So I'm at the vault all the time. So if you haven't become a member, please do so. A lot of great people here.
Awesome. Thank you so much for being here.
Thank you for having me.
Stay locked in and go all in.